Tech's been one of the worst performers this week, with the NASDAQ breaking some key support levels along the way. For more on where the space is likely to trade, let's bring in Deepwater's Gene Munster. Knows the space pretty well, I'd say. What do you make of all this?
Scott, I make of this as a first disconnect in 2 years between the fundamentals of AI and the trading, and the fundamentals continue to be strong. If you look at what NVIDIA said, what Broadcom said, Marvell down big this week on some uncertainty about where Amazon was going to spend a lot of money on AI. And so from the highest level, I always come back to where I've been as a tech investor, is just the fundamentals. And the fundamentals of these companies remain strong. And I'm out here with a prediction that we're going to have 2 good years left, going up into bullish years. It's going to end in a spectacular bursting of a bubble. And what I think of it when I see this, it shakes my confidence. But ultimately, if I focus on the fundamentals, I continue to believe that this trade is going to play out. One last piece, you've enumerated this all week, Scott, but just as a reminder, is that this is common, these pullbacks, 12 of them from 95 to 2000 with .com. This is the second time we've had over the last couple of years. So I put this in the context of this is actually, I view this as kind of a healthy reset of expectations.
I don't think anybody would argue with you at all that the fundamentals remain strong. It simply becomes a question of what you are willing to pay for those fundamentals. Even if so strong, if, let's say, revenue growth is not as strong as it was, what should you pay for it relative to what you were paying before? Fundamental question about investing, correct?
Absolutely. And you hit it right on the head, is this, what is the ultimate growth rate here? And when we think about, again, I'm giving a broader perspective on the AI trade, we think that the growth rates are going to be higher for longer. And so let's just look at NVIDIA as an example. Next year, the street's looking for just over 20% revenue growth, down from like 80% in calendar 25, down to mid 20% in calendar 26. I think that number can be meaningfully higher, 35, 40%. And it seems a little bit out of touch with reality, those kind of expectations. But if we're right on that, I think that these stocks will move higher. And just one of the reasons, where does that confidence come from, is that if you take some of Jensen's comments that he had on the last quarter about this 100 to 1,000,000x more compute needed to get to reasoning and advanced reasoning AI. And as we went out and talked to people who are building these, they're companies in our portfolio, private companies, public companies, it's pretty clear he's onto something. And ultimately, if that's the case, and this is going to, I think, surprise some people, is I think that NVIDIA's, some of its growth could potentially accelerate early next year relative to the back half of 25.
Well, we said nearly $1 trillion in market cap wiped out since the beginning of the year, or near so, when the stock did hit its high. Let's talk about a stock that you've been so closely identified with over the last handful of years. It's Apple, obviously, from your prior life, obviously, too. The knock on Apple, okay, is that it trades at a premium multiple for non-premium fundamentals. You just laid out the case that the fundamentals remain strong. Apple trades, last I checked, north of 30 times its forward earnings. China revenues are 20%. Components that are loaded into all of these devices come from overseas, where we've been talking about tariffs every single day this week and will be for the foreseeable future. Can you make the case that Apple deserves, I'll use the word deserves, to trade north of 30 times earnings in the face of what I just described?
I think the company can trade in that low 30s, and then as the years advance, I think the numbers will ultimately be higher. And that's my case, is that I think that the street numbers are too low. If you look at the iPhone growth numbers for fiscal 25, the street's looking for 1%. I think that number could be 3, 4, or 5%. They step up for fiscal 26, so as we advance through the year, there's going to be more focus on the out-year number, but it steps up to 8%. I think that that's probably the right number. And so I think as a starting point, making the case for the multiples, I believe that there is upside to the numbers.